This is Mark the Meerkat in with Grok Trade with the weekend review, good through August the 8th, 2022. Hey, I'm in for Dez, who's at Keisha's wedding. That's right, Keisha from Grok Trade is getting married this weekend, so he's in Indianapolis attending that wedding, so I'm going to sit in for him today. So let's take a look at the broad markets. First of all, 71% of the S&P 500 has done its earnings here in this earnings parade here the last few weeks, and 77% of them topped their earnings. And in fact, on average, they beat by 2.5% on earnings here in the first 71% that have reported so far. So again, we're not at the end of the earnings parade. Know when our particular holdings are having their earnings, because we do not recommend you trade over earnings, because that's a known event with an unknown outcome. So let's take a look here. What's going on in the S&P 500? This is the daily chart here. Last weekend, Des talked about this was in a bullish formation, and it did break out, and then it did pull back and bounce right off of this. This is the 50 moving average, and then rolled right back up this week, and it stalled right here. So it's kind of like, a diver. It was in the deep depths here, and it's starting to rise up. Well, it's got to slow down. It doesn't get the bends here. And right here at the 100 moving average, and right at this area of support and resistance, going back here to June, major resistance, going back here to May, major support, going back here to March, support. So this is a very strong line of an area of interest to the market. Well, it's been resistance, it's been support. It's now at resistance here on the S&P 500. Let's take a look at the Dow Jones Industrial Average here on the DIA, the Dow Jones Industrial Average ETF, and it was major resistance here, and it's also broken out right to the 100 moving average as well, just below where it was in this area of major resistance at its last swing high, kind of a support area back here in May, and a support area back here in March. Let's take a look at the QQQ. That's the NASDAQ 100. Now it is above the 100 moving average and right at the at this area of support and resistance. It did close above it on Thursday, and on Friday it came back and closed right at that area. Now it's higher than it was in its swing highs here in June, and it was an area consolidation back here in May, and it was support area here 3 times. It was support area here back in March. Now, I do want to notice that on the first 3 that we've looked at so far in the daily chart, all of them are well below that 200 moving average. So, although we're now above all the moving averages except for the 200, that still is a major area of possible resistance as if we go higher. And then we got the small cap Russell, the IWM, which is the ETF on that. Now it is nicely above this 100 moving average. Again, right here's that area of resistance, which was the last swing high here back in early June, and it was a resistance area back here in May, and get close to it back here in early March and then mid-March. So this again is an area of possible support and resistance, and it's right at that area. Again, it's just taking a breather coming off of its lows. Is it just going to rest here and then take off again, or is it going to decide to turn back and around? Let's take a look at the financials, the XLF, and it is a little bit weaker than the rest. Look, it has come up in its high basing, but well below its 100 and way below this area of this last swing high back here in the early June, end of May. So it is lagging a little bit on the financials right now. Now let's take a look at the VIX index. Now that VIX index is what the fear index, and that the higher the fear, the more cautious people are in the market, and they tend to be in panic mode, in the fear mode, right? So again, the higher the VIX, the more fear in the markets. Well, we've been extremely high over the last since the first of the year. Whatever normal is, normally the VIX is around 15, and if it goes above 20, it's considered high volatility. We have been above 20 the entire year, except for back here in April. So other than that, but now look at this. This major area of support, which goes back here, this rising line of possible support. It did bounce off of it last week when Des talked about it. It did bounce up. The fear increased for a few days, and now it's decreasing for a few days, and now it is closed below that major support area here, which goes back here to the first of the year. Now, so that again, the lower this is, the less fear in the market, the more bullish it can become. So I have to see where that fear factor goes. Now it's been in a nice steady downtrend here since the middle June. Just some burps up once in a while, but in general it is trending downward, which means it's becoming more and more bullish. Again, you have to reverse your thinking on that there on the VIX index. Alrighty, then let's take a look at that. That's all on the daily charts here. Let's go ahead and take a look at the weekly charts here, starting with the S&P 500. So this is the S&P 500 weekly chart. Now, after we finish this, I'm going to give you a quick lesson on Meerkat Trading Rule number 10, which happened on Friday with the jobs report. And we can see what happened during the day on the S&P 500. So let's take a look here as this is going up here now. 4 weeks in a row we are up, but it was a very small update week here on the S&P 500, the SPY. But interestingly enough, the weekly chart, this yellow line, is the 200 moving average, which is right where it is styled on the daily chart as well. And of course, they're completely different places on there because this is a 100 week line and the other is a 100 day line, but they happen to be coinciding right there as an area of resistance here for the SPY. The DIA is not there. Oh, actually it is right at its 100 moving average as well on the DIA, the Dow Jones Industrial Average ETF, and it's stalling there a little bit. Now again it has nice, would end up being slightly down for the week, but but it's now resting here as we talked about. Then here's the NASDAQ. It had a bullish week here, and it increased here for the let's see, third week in a row here. We are up, and but it is short of its 100 moving average there, but has broken the 20 moving average on the weekly chart. And then the small cap Russell here, it was in a falling wedge and it broke out from there last week, and now it's continuous breakthrough above the 20 moving average. Again, we have the 100 moving average up here, and we have the 50 moving average weekly averages up here as well. Now it is above the 200 moving average. That's the good news on the weekly charts. All right, I'm going to give you a quick lesson here on Meerkat Trading Rule number 10, which states that it's not the news that counts, it's the market's reaction to the news. Let's get up the daily chart. So this is the SPY on the 5-minute chart intraday for Friday. Now on Friday, all the focus was on the jobs report from July, and it was expected to increase by about 250,000 jobs. It ended up increasing more than 500,000 jobs. You would think that was great news, right? Well, happy days are here again. We're adding more jobs. But what happened? The market immediately dropped 1% in pre-market, and that's what it is over here. Look at it, immediately dropped 1% on the S&P and on many of the markets. And then it opened up down 1% for the day. Well, then they said, well, so you would think that was really great news, but it's not the news that counts, or your interpretation of the news that counts. It's the market's reaction. And then what happened was it filled the gap. It came right back up into the area it was at in pre-market, and it's 200 moving average on the 5-minute candles. And then it said, well, wait a minute, it was bad news. No, it was good news. Now it was bad. No, it was good news. It ended up at the day, it ended up down minus 0.17. So all that fluctuating around over the news, and they kept interpreting and reinterpreting the news throughout the day. Now again, at the end of the day, most of the talking heads were saying, well, it's because the jobs were so strong that could add to inflation, which would mean that the Fed would have to continue its very aggressive increasing of interest rates in the 0.75% in their meeting in September. So there's the initial reaction, then they think about it, and then there's another reaction, and then all the talking heads, and ended up just kind of being neutral on the day. Pretty interesting. Just remember, Meerkat Trading Rule number 10. Now, hey, if you'd like to trade the Grok trade way, we do have a mentoring program coming up here in August as well as in September. And if you'd like to find out more about that, go to groktrade.com, groktrade.com. So this is the main page here for groktrade.com. Now, we are about to do a major upgrade to all of our website pages, but we're going to kind of preview something for you that we're going to. If you go to Trading Mentor, and again, our mentoring program consists of 3 days of intense training, and then we are your mentors from that point forward to implement all that. So here's Des. We has, he's got this very casual video. Before, we would have you sign up for a discovery call where we would walk through this, find out what your needs are, where your trading is at, and answer all of your questions, which the process could take quite a while. But what we've done now is design a series of videos that are connected to each other, so that it's about a 2-minute video, and then at the end of that it asks you a question, and as to which way you want to go. Where do you want to go? Like, what kind of a trader are you? A intraday trader, swing trader? And then depending on your answer there, then the next video plays. And then after the end of that 2-minute segment, it then asks you another question. It's like, what type of investing are you doing? Or what are you investing in? Multiple questions and to answer everything you can know about our mentoring program. And then by the end of that video, if you go all the way through, it will give you as many answers as you want. And then if you want to move forward with our particular program, well, then we will have a brief call with you to find out how you want to proceed with that. But this is a quick and easy way, and a very concise way for you to get the information you need. And then when you do have all of your questions answered there, we can then talk with you about the possibility of a mentoring program for you. So again, that's groktrade.com. Go under Trading Mentor. Again, we're just previewing this particular part of it, and then again, in the next week or two, we're going to be having our new site all just reformatted and make it clearer and more concise for you. So this is Mark the Meerkat. Hey, just remember that Meerkat trading rule number 10. It isn't the news that counts, it's the market reaction to the news. Trade well, and may your winners